All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for August 24th. We've got one more week, then we are 3/4 of the way through our market this year. Pretty amazing. For 2 weeks in a row, I have requested a lower than our market's going to head lower. Yet, once again, the S&P rose 0.7% to record highs on the close of technology, consumer discretionary, communication services sectors, all posting strong gains, outweighing a decline in energy and financial stocks. Now, it's interesting because if you look at this chart, we basically picked up all of our gains on Thursday and Friday of last week. And I didn't even calculate a 0.7, I calculated a 0.3. So I scratched my head because, in all honesty, I thought our market would look something more like this. Something where we're going to see a flattening and a little bit down, but we were surprised on Friday. And I'm going to say that was the Apple surprise. That Apple surprise helped us out. So I'm not sure where the calculations are coming from because I didn't see that last week. I don't know, and I saw their numbers. I just don't see it. But those numbers would create that 0.7. So plain and simple, new closing high. The index is up 5.2% for the year to date, having jumped 15% in the last 3 months. This week's record highs came amid the rally in technology. And this is the interesting part. This is what, 25, 26, 27% of the S&P, 40% of the NASDAQ composite. Apple, Microsoft, Facebook, Amazon, and Google. Amazon and Microsoft have been hit. Those were kind of the losers last week. But they're all grouped together. Increase in weekly jobless claims, and obviously it talks about Apple. If you're in the industrials, the utilities, and the materials, those are also not doing the best. Bill actually makes a comment, and he's exactly right. Stick with your positions. You'll eventually be right, just like a broken clock, which is right twice a day. I get it. I love it. I love it. I understand, and it just makes you scratch your head sometimes, right? So here we go. Let me talk about where we are at and what I'm thinking. My expectation is that we will have a volatile bearish market through September and October. I get asked this why all the time. And Lance, to be 100% honest with you, I'm going to pick on you somewhat this week, tonight, plain and simple. It does not mean that I don't want you to be part of our group. It does not mean I do not want you to be part of Hurley Investments. But I'm going to tell you exactly the way it is. And I'm sure part of that's because you like to, let's face it, you like to push the envelope, and you're allowed to do that. Everyone is. But I'm going to point some simple facts out to you, and I'm going to use you as my guinea pig for tonight. I do apologize and enjoy. So the short answer is, why would I say that? Well, because that's what happens in September and October. I believe I set it up for you last week. Typically, not finding it. So it had to have been last week. Okay, I don't see it right now, so I'll get back to it. But plain and simple, it's the probabilities. If you don't play the probabilities or you don't follow the probabilities, you are ignoring history. The probabilities put your portfolio, no pun intended here, with the most probable expectation of being profitable. So when I say what I'm doing, I'm letting some positions run, but I am getting very close to pulling the trigger and buying protection to get us through till the end of October to take some profits and reinitiate it for a November election. So let's talk what we did with Apple. Today, 8/24, you have to be on record of owning the stock to receive 3 more shares Monday, the 31st. It's that simple. So way back when, what I did is I went to FinViz. And at the time, I pulled their forward PE. Right now it's sitting at 32.44. Multiplied it by its earnings for the next year. And if I take those two together, gonna get my my calculator, and you multiply those two, 32.44 times 15.52. Oh my gosh, that puts you at 503.46. Why is that number important? Well, if you look at the current price of Apple, it's trading at 503.43. Pretty darn close. So the question is, Kevin, how did you get to your target? How did you get to the 480 to 500? At the time, all I took was the forward PE, which was closer to 25. And I took the earnings for next year, which stayed right here at around, it was around 15 at the time. But I took the forward multiple and I actually put it at 35. Well, Kevin, why did you do that? Because at that point in time, the regular PE was at 35. So I took the regular PE at 35 times the $15 it was, and that brought me on the low end at 480. And as I gave myself some leeway, I came up to 498. I created using basic facts and figures, I created what I expected Apple to be in the future. And we went from 380 right up to 500. It's amazing that we got up as high as we did. Now, as we take a look today, and Lance, I'm going to just use you for the example. Kevin, at one point today, Apple was up at 515. In pre-market, I actually saw it as high as 519. So the comment was, Kevin, why did you get out of positions on Friday and take your profits at 498 and change? Why did you do it on Friday and not today? Well, I didn't do it today because, plain and simple, we hit the high end of our spectrum. We hit the high end of where I calculated Apple could be. And let's face it, it was a pretty ugly day. Opened up right down to 500. Half hour into it, we're up at 507. Then we came all the way down to 496. And we struggled. I mean, we went up, we went down. I don't see bullish movement in this chart. We opened at 514, we closed at 497. That can't be right. Closed at 503. And we're already, by my estimates, 1.28 or 28% overvalued. So, plain and simple, yes, I'm a greedy SOB when it comes to making money in the stock market. That's what we do. We're greedy and make as much money as possible as safely as we can, being greedy. Friday at 498.16 to 498.68-ish, we took profits on long calls. Let me introduce you to an idea. We made a ton of money, and we will most likely be back into Apple sometime next week. Well, Kevin, why did you take it off before this split? Again, because the probabilities, or historically, options get screwed on their stock splits. The money makers are going to take a couple points. SEC takes a couple points. Robinhood takes a couple points. You're going to lose somewhere between 5 to 10 cents on your options due to the splits. So we're out, and I'm going to make a pretty good, I'm going to try to make a pretty good paper on Target and Apple and what we did. Could I have possibly got it at 515 first thing this morning and taken profits? My simple answer is, of course. But again, at any time, if you think we're here to catch tops of tops and bottoms of bottoms, it's time for you to go somewhere else. That's not what we do. So we took it off. Today, what I did do is we did add a $500 long put. So if you still have stock ownership, then you had a long put added at 500 October 02 of 2020. Kevin, why would you do that? And actually, something else I should say, if you still had bull puts in place, I left those alone to get your full amount. You'll make your full amount on those. But short answer, we added we added the puts. And what you're going to see on Friday, it would not surprise me if Apple is back down at 480, if not all the way down to 440. Because what's going to happen tomorrow? Everyone that's excited to get their 3 shares of Apple, for everyone that they owned, you're going to see a dump on Apple tomorrow. But Kevin, after hours, it's still going up. Yes, it is. People are still getting into Apple so that they can be recorded here in a half hour of owning Apple shares. You are correct. But you've got some really stupid people in the stock market. You've got some idiots that were in it to get their 3 shares that are selling their stock tomorrow because you're going to get 3 shares next Monday and think they're making a profit. They don't understand that where the stock price is on Friday at the close will be the split price. And if it's down at 440, it's going to open up at $110 on Monday. What they're trying to do is sell off their 1 share, their 10 shares, their 30 shares. And you're going to see a sell-off on Apple. We'll go through our stock split, and then you're going to see a sell-off in the mutual funds that'll now own an excessive amount of shares. Or because of the run, will rebalance at the end of a quarter because they have an excess amount of Apple in their funds. Some prospectuses only say 23.4% can be in technology because that at one point in time was the amount of the S&P tech sector. I think that's now the S&P financial sector. You're going to have some funds that have more than 5% of the value of the fund ownership as an Apple and have to pare that down to 3.8 or 3.5. You're going to have idiots that wanted their 1 share and going to pick up 3 more and are just going to sell off because that's what typically happens and try to make money by getting these 3 more shares on Monday. It's what happens. So we added a long put in place. We will keep that long put in place, and it will also go through a 4-for-1, which means that long put will most likely be worth $125 come next Monday. And hopefully Apple's trading back down at 110 to 100 then. Because if they are, you've just picked up 25% more shares of stock. When we look at positions right now, it's pretty amazing. Our profit today came from Disney, Boeing, then Apple. Under Armour was a big one. Facebook, JP Morgan making a bounce, Bank of America, Visa, Baidu. I mean, those were our big bounces, right? As we look at positions in general, I'm in a lot of straight option positions. Apple, we did a little bit of sell-off. We do have the puts in place. Boeing, lot of share ownership in those leap calls there, just letting some things run. We have Baidu down at the bottom end of its range. I'm sorry this hasn't bounced back up to 27. That would have been my expectation, but we're letting some Baidu shares run. A couple of you made a comment or worried about this class action lawsuit. There is no class action lawsuit. There's an SEC investigation on IQ, which they own like 30% like they do in Alibaba. Costco's, there's some leap calls that we trimmed those down a bit. One person still has one. Disney stock, we're just letting bounce up. We're looking at that 133 before we're going to add some more protection there. Ford bouncing back up to that $7 range. We do have a covered call on it for October 2nd. Facebook, leap positions and some stock ownership, letting it run. FCX, we do have a covered call on it, way up at 16. Nice bounce today, but I'm not too worried about those covered calls. General Electric, all I'm going to say is our bull call is in serious trouble. It will probably not make any money, but instead of trying to save nothing, buying and selling, the short answer is we're just letting it run. Nice to see a bounce on some Intel shares. Actually, it's down 14 cents, but it's still bouncing off of the 45. JP Morgan back over 100. Nice bounce on the low end of its range. Key Corp, same thing. Nice bounce on Key Corp. Low end of its range, so I haven't been protecting that right now. Bank of America is unprotected, just to let you know. It's just we're running that August through the end of the year run that you normally see on those banks. Someone just made a quick call. The quick comment about Baidu, it looks like Baidu is just going to move, and it doesn't. I know that pisses me off. We're still in it. And the Apple bull calls, just as a heads up, those we're going to keep where they are and try to get our 100% return on them, just so they can stay the way that they are. So yes, those of you that are in some of the Apple bull calls, 230 350s, 210s 350s, 260 300s, we're just letting those run. They are enough in the money that we want our full profit. All right, as I keep going through, where are those last ones? Under Armour, Low end of the range, nice bounce. I might expect to bounce all the way back up to 1180. Visa, nicely breaking over 200. 220 is the next one on the upside there. Although let's make sure that hasn't changed. Let's make sure that has not changed. Might be 212, but it did break out of its channel. Good run. I'm going to tell you 220 is where you should expect to see Visa to get back up to. Here we go. So that's where we're looking at. I still expect our markets to end lower this week. Even though I was wrong last week, I would expect it to go lower because you're going to see most likely a sell-off in Apple. Everyone owns Apple. It's a huge position in people's accounts. Dow Jones touching once again, overbought. We should see a bit of a sell-off. Same thing with the S&P, touching overbought. We should see a bit of a sell-off. And the NASDAQ, oh my gosh, touching the overbought. We should see a bit of a sell-off. Where the Apple end August, again, I do think we'll see a drop down where it'll be flat, but I am moving my position from being down 2% to being flat. Earnings, we're in our second week of retail. Palo Alto Networks did pretty good. Best Buy tomorrow, Hormel, Medtronic, Hewlett-Packard Enterprises, Salesforce, Toll Brothers, Nordstrom's, Urban Outfitters, Chico's, Dick's Sporting Goods, NTAP on Wednesday, Abercrombie and Fitch, Dollar General, Dollar Tree, Tiffany Dale, Gap, Hewlett-Packard, HPQ, Hewlett-Packard Enterprises, HP. That I'm a little confused. Marvel, Ultra, VMware, Friday, Big Lots, and Cena. Economic reports, durable goods on Wednesday and GDP on Thursday will be the big ones, as well as the Jackson Hole Symposium, which means Thursday we also should receive some type of speech from Powell. Powell will most likely have some type of speech for us to hear on Thursday. Jackson Hole Symposium is a Thursday-Friday event. It'll be all over your news Thursday and Friday. So that's where we're looking to go. Personal income, personal spending also on Friday will be interesting to see how bad or where people are looking to have their money at. Internationally tomorrow we have our futures will most likely be run by the European GDP. Still letting things run, but preparing to get protection on at a moment's notice. I found some interesting articles I wanted to share with you. Here's a list of here's a list of stock bull markets through time and how this one stacks up. Just pay attention to some of the charts. Pretty interesting to see that we are now in a new bull market after we went through a bear market of more than 20%. Bull markets through history, length of time, they're all listed right here for us so that we can understand. Pretty good run from March, pretty good run from March of 2020, to be honest with you. But understand, these are just percentages. Once you lose 50% or more, it takes 100% return to get back to where you were at. And not only that, but unfortunately, something that's not said very often, in our 2008 bear market, and our 89.90 crash and our 82 crash, most people bailed out of everything. And the volumes were so low in the last three crashes, probably because we had so much information coming out, that even though the markets have moved hundreds of percents, most people's portfolios did not. When I mean most people's portfolios, we're talking 90% did not move up. 90% were unable to take off. So it just doesn't work that way. There's the short answer. And again, remember, percentages are percentages. They are never your friend. You're really looking for portfolio growth. All right, as we continue to work down, there's our bear markets. Just a heads up, Kohl's sees billions in market share up for grabs as retailers go bankrupt and shut stores. We are going to see some, how do I say this? We're going to see a shift in retail sales. We're going to see a shift now that the great experiment has proven out that more people can work from home, which I think they can't. I think, in all honesty, most people that work from home won't work as hard as they do if they were working in an office with someone looking over their shoulder. There's going to be a glut of commercial real estate on the market. And plain and simple, it's just going to be tough. That's the best way to say it. We're looking for some tough times coming up. You're going to see a shift of the have and the have-nots when it comes to retail. 44 retailers, including Steinmart, Pier 1 Imports, JCPenney, Neiman Marcus, have filed for bankruptcy so far. More than 6,000 permanent store closures. I'll be honest with you, Steinmart, Pier 1 Imports, JCPenney probably are not coming back. They filed for bankruptcy protection, but they're just not going to make it. I haven't kept up with all 44. I feel if you've been in retail or energy during this time period, you have no business being in the markets. Easy to tell, loser positions, energy and retail. Glaring red flag. Not the positions to be in. All right, Fed expected to make a major commitment to ramping up inflation soon. It needs to be at its 2%. It needs to make things more expensive for us because that's how the economy runs. I can't explain it any better than that. But if we don't have the 2% inflation, which primarily comes from staples, meaning energy, food, and so forth, our banking system doesn't work. So it'll be interesting to see where things are at. Look for things getting more expensive for you. Please read through this. It's a relatively easy read on economics. Pearson appoints former Disney executive Bird as a new chief. Kind of interesting to see a bit of a shakeup, but good to see Disney. Great position to be in, and I like this as a new, what do you call it? A new chief officer that's being put in. I found this very interesting. This came to me from people who are financial advisors. Financial advisors who reported losing business in 2020 due to technology's problem, right? Lost an average of more than 1/5 of their book, a Broadway survey shows. So here's the catch, right? I love this statistic. Financial advisors reported losing business in 2020 and on average lost more than 1/5 of their book. I'm going to go at it two different ways. Hurley Investments. Doesn't mean everybody's up. Year-to-date market gain for my No Parker, my education group, we're up $1.8 million on 13.9. When you take 12 into that, we're up about 15%. Doesn't mean everybody is. That's where we are as a group. Another part of Hurley Investments is Coda. This is Kiev. Kiev on 4.8 is up 700, and let's take that back. On 4.5 is up 751,000. Let's see what that is. 751 divided by 4.5, 16.68. Is that guy really beating me? Let me work my numbers really quickly. 16.68. I'm at 1.8 divided by 120. Dang it, he is beating me. And then I've got my non-student group, a little bit less than you guys. 1.1365, excuse me, 1650 divided by 10.8. 1650 divided by 10,800, and I'm up 15.27 here. So if we're looking at what's gained or lost, we're great. The other side of things, and again, this came from a comment that's here. How many of those advisors use protection or collar trading? None of them. In fact, my next comment was going to be, and Lance, I'm going to go to you on this. And yes, we're in Boeing and some things haven't come back. But Lance, I will charge you 1%, and you can sit in the S&P 500. I'm going to put you in a fund, and I'm actually going to make about 3.5% off you. And the question is, what the hell did people do for you when it went from here down to there, and then you waited middle February, March, April, May, June, July, August, September, August. So for 6 months, you sat there and waited. Plain and simple, here is your option. Go to a stock picker. Sit through it. Worry about it. Get your ass handed to you. And for 6 months, know that when the markets come back, you're probably going to still be down about 1.5%, because that's what they're going to make overall. They're going to make 1% off of you, and at least 1.5% to 2 basis points on having you in a fund and having a certain amount of money in that fund. If you're okay paying a guy commission to not do a damn thing for you, move your money out and good luck. Now, Boeing, yes, some of you are in Boeing. Some of the smaller accounts are in Under Armour. Guess what? They have not come back yet. No brainer. Oh my, you mean Boeing's not up to 400 and Under Armour's not up to 28? No, they're not. And they might not be for a while. But you have over 200% more shares of Boeing in your account, and you're at least up 100% on Under Armour. So if I take these out to 2 years, and we go to something like Boeing, you again are more than welcome to see shares go from 400-ish when we got in the beginning of 2019. You are more than welcome to go sit in some dumbass fund and get charged at least 3.5%, if not 7 to 9% overall. But go pay your guy 3.5% to tell you, don't worry, it's going to come back, and not do a damn thing for you during this time. Or you can pick up 200% more shares of stock. Kind of a no-brainer for me. Or you can sit in something like Under Armour at 27 shares, have it down to 10, and have well over 100% more shares of stock. Or you can just have someone tell you, don't worry, it's going to come back. Or more importantly, you can sit in something like this and watch 35% evaporate or 30% evaporate. Or if you go and do some research on some of the things I have out there, see a lost decade of 11.5 to 12.5 years where you make nothing but continue to pay fees for someone doing nothing for you. Let me put this into perspective just one more time. You are welcome to sit from here how do I want it to draw. There we go. Huh. That didn't work the way I wanted it to. Try this one more time. You are welcome to get in 2000. And if you notice, it goes all the way to the middle of 2013 there, where it opens up at, I don't know, February it opens up at 1394. And guess what? It's still that same amount. In February of 2012. You are welcome to sit through it. You are welcome to do anywhere in the middle, maybe right here, and wait through this time period from January of 98 to October of 2010. You could wait to this time period. You could wait anywhere in the middle. I don't give a shit. Yes, we've had a nice run right now, but it probably won't last. We'll probably have another market crash. We're probably going to have a weaker dollar, and we're going to have to pay it sometime for all this money we're putting on the card. The choice is yours. And in all reality, it's time for you to make a decision. Do you want someone looking at your account every day? And not saying that I do the best job every time, because please understand, I make mistakes. I might be a pretty cool Apple guy right now, but man, ugly at times. Markets are ugly at times. If you want me to sit on your portfolio and charge you less and do nothing for you, I'm all in. Or go to someone else to do it for you. Don't care. But if you look at a simple chart and you look at what you're getting, it should be a no-brainer. Figure it out. With that said, are there any questions for today? Are there any questions you guys have that, oh, I'm sorry, one more thing. I found a very interesting article on behavioral finance. If you want to see some weird things that happen in the stock market and some explanations of why they're here, herd mentality, takeaways, behavioral finance, gaps, anchoring, this is all great stuff. Please read through this to see some of the weird stuff that moves our markets. This is it. You've got to check it out. So with that said, any questions for today? Any questions on anything that I may have missed for you, or a question that you'd like me to give a shot at? Or are we ready to call it a night? I will definitely check out that Twitter thread. Abraham, thank you very much. All right, hey, we look like we're having a good night. Jim, I think you're in here. Give me 2 minutes and I'll be giving you a call back. Just gonna go check on the kid. All right, guys, hey, thank you for the rant and the raving. Have a wonderful evening. Lance, sorry to put you on the spot. It's just a matter of making sure you understand what you're getting. And if you don't, it's been a pleasure. We'll part as friends. I will wish you good luck, sir. All right, everyone. Have a great evening. Talk to you later. Bye-bye.